Tesla's been a great example. Auto analysts should not have been following that stock. I want to also hold another example out there just to give you a sense of what can happen if you just stick with it. Tesla, how long did we have to, bear the slings and arrows of people who were analysts and others who were trying to denigrate that story, and we're actually ignoring the data as it was coming through? The traditional auto manufacturers really didn't start thinking about electric vehicles seriously until I'd say the last 2 years. And now Tesla's running circles around them, and we believe will continue to run circles around them. We had 3 analysts on the Tesla stock collaborating. And because of that, we understand how powerfully the convergence between and among technologies is going to play out. I need say no more than Tesla going from $25 to $1,000 in 2.5 years. It was a major surprise to some people.
In this video, Cathie Wood of ARK Invest talks the stock market crash, volatility, investing for growth, contrarian thinking, and Tesla. She also rips the clown stock analysts who never should have been covering Tesla stock and didn't quickly realize they were way out of their depth. There's still some of these dickheads around today. Nothing personal, but I mean, when you're not competent, you've been completely wrong, you miss the mark literally every single quarter for years in a row, and you don't ask yourself the question, hang on, am I missing something here? Is maybe I'm a little bit out of my depth here, I don't really understand all the important elements of this company and their business, their technology. Maybe that's why I'm missing the mark every single quarter and being embarrassed constantly. Maybe I should raise the white flag and say, hey, somebody else take this, I got no idea what the fuck I'm doing. I won't name names or anything, but if I were to name names, I might say such names as Tony Sakanaki, Ryan Brinkman, Craig Irwin, the list goes on, but of course I won't name names. That'd be unfair to point out the people that don't know what the fuck they're talking about yet still continue to cover Tesla for years. And Cathie Wood also points out the stupidity and the blindness of the legacy automotive industry. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support.
A lot of the people who enter our strategy understand we are talking about a 5-year investment time horizon.
Out of interest, let me know in the comments below, what sort of investment horizon does everybody watching have? 1 month? F off. A year? Get the f out of here. 5 years minimum? Stick around. 10 years, 15, 20 plus years? Let me know in the comments below, what sort of horizon do you have in mind? As I've said in the past, I'm a multi-decade investor. I'm literally talking 20, 30, 40, 50 plus years into the future. This doesn't necessarily mean buy and hold a single asset for that entire period of time. But what I'm looking for is huge disruptive transformations that are going to occur over a prolonged multi-decade period.
As I've mentioned before, the rate of return expectation we have for our portfolios during the next 5 years, even more so after this last one, is higher than I have ever experienced in my business. And as I mentioned, I've been doing this for a long time and have a lot of experience doing it.
Cathie Wood makes a fascinating point here, emphasizing that because of the massive sell-off in growth stocks, in particular many of the names that ARK owns, the returns that they're expecting over the next 5 years now are higher than they've ever been in the history of the ARK funds. To illustrate my point, on screen now I'm showing the current returns I'm expecting for Tesla stock over the next decade in my bear case, my base case, and bull case scenario. These are pulled from my Tesla price targets available exclusively on Patreon. If you're not already signed up, check out the card in the corner or the pinned comment. And as it stands today, due to Tesla's recent sell-off, I'm currently expecting, even in the bear case, a 12x from where we are today, in the base case a 28x, and in the bull case a 57x. For context, at Tesla's peak closing price around $1,229, I was expecting a 9x in the bear case, a 22x in the base case, and a 45x in the bull case. The recent price decline in Tesla stock means that I'm now also expecting a much higher return on Tesla stock over the next 10 years. I'm now expecting 3 times more in my bear case, 6 times more in my base case, and 12 times more in the bull case. This is a huge difference. The cheaper Tesla stock is, the more I expect I'll make owning Tesla stock over the next 10 years.
I want to also hold another example out there just to give you a sense of what can happen if you just stick with it. Tesla, how long did we have to, bear the slings and arrows of people who were analysts and others who were trying to denigrate that story, and we're actually ignoring the data as it was coming through?
Excellent point by Cathie Wood here. Now, what kind of people might be prone to ignoring data? Well, let's think about a few examples here. Possibly somebody who's so overwhelmed with emotion that they're basically brain dead, their logical faculties have taken a walk, it's pure emotion. Sure, maybe this is a scenario. Then again, when it comes to investing and stocks, your emotion should take a back seat. In fact, they should get the fuck out of the entire building. Perhaps in another scenario, someone might ignore data because they're a moron. And in other cases, many cases in fact, people often ignore data because secretly, deep down, they have a fear that their entire world may come crumbling down when the thing that they believe so earnestly, so certainly, without sufficient evidence, turns out to be incorrect when they examine the data, aka the evidence for their beliefs.
If someone had sold Tesla in 2019 as the SEC was investigating the famous tweet, and as fears that they would never be able to scale manufacturing were rife, and as fears that they would run out of cash were also rife, if you had sold then, you would have taken a temporary loss and turned it into a permanent loss, and you would have missed a move in the stock on this basis, split basis, from the $25 to $30 range up to $1,000 in a little more than 2 years.
Just take a moment to empathize. Just try to imagine what it would be like being somebody who owned Tesla stock and sold for a loss in 2019 only to see the stock go to the fucking moon over the next 18 to 24 months. Just for the record, in 2019, I was bought exactly 1,000 shares of Tesla, average price about $51. To put that in context, I like to track this stuff, I'm super nerdy. That was 3.78% of the total money I've invested in Tesla stock, yet it now accounts for more than 15% of the total Tesla shares I own. In other words, the return on this particular year, absolutely ridiculous. This is another interesting way of looking at the data as well. There were people in 2019 who thought Tesla stock was a sell, they didn't want to buy anymore, let alone hold on to the stock, who literally sold the stock. My average price here in 2019, highlighted here in the green, I'm still buying in 2020, the price is significantly higher, still buying in 2021 where the price is enormously above this, and still buying in 2022. I still see Tesla as a bargain today. I was looking at the data in 2019 and 18 and 20 and 17 and 21 and 16 and today as well.
That is the nature of the innovation that's going on out there, and the exponential growth, the explosive growth opportunities out there. And believe me, those companies that have been investing aggressively now and may not be profitable now because they're investing, much like Tesla did back then, they're going to be the winners, just like Tesla is. The traditional auto manufacturers really didn't start thinking about electric vehicles seriously until, I'd say, the last 2 years. And now Tesla's running circles around them, and we believe will continue to run circles around them.
The fact that legacy automotive manufacturers didn't get serious about electric vehicles until the last year or two is stunning and incredibly stupid. Once again, let's talk about data. Had these companies been looking at the data back in 2010, 11, or at the latest 2012, when Tesla's Model S was released and winning every award ever, dominating in performance, features, functionality, just slaying it, literally the best car ever made, literally 10 years ago, there was sufficient data available to know with certainty that electric vehicles would be adopted and that this disruption would follow an S-curve and therefore happen extremely quickly. Yet these companies did nothing for an entire decade because they're too stupid to, or too blind to look at the data. Many investors will be surprised when these companies ultimately go bankrupt later this decade. That is, investors who also hadn't looked at the, wait for it, data.
Where do you think ARK is most misunderstood?
I think that many people don't know us. And so they don't understand the depth of our research. They don't know the breadth of our research ecosystem, which reaches into the world of innovation to derive insights that are not available in the financial world. I think they don't understand that our analysts, their responsibilities are broken out not by sector or by industry or sub-industry, but by technology. And there are 14 technologies involved in the 5 major platforms. These technologies, if they're going to move down learning curves and costs fall as we expect them to, then prices will fall, access will increase, and these analysts who have a specialization in technologies will appropriately be generalists on the sectors as they watch these technologies traverse more and more sectors as the costs and prices come down. I think that most research departments are not set up like ARCs, and they don't understand yet. They should. They should start. They are starting to understand. We're getting some incoming questions, but I think Tesla's been a great example. Auto analysts should not have been following that stock. Should have been energy storage analysts, robotics, software as a service, artificial intelligence, very importantly, not auto analysts. We had 3 analysts on the Tesla stock collaborating.
Great to hear Cathie Wood laying the smackdown on many of the automotive analysts who in the past have covered, or still today, yes, still today, there are some auto-only analysts covering Tesla stock who have absolutely no idea what they are doing. You can always pick these clowns because they make the kind of brain-dead comparisons between Tesla and traditional automotive companies. Tesla only makes X amount of cars per year. Toyota makes Y amount. Therefore, Tesla's dramatically overvalued because the numbers.
And because of that, we understand how powerfully the convergence between and among technologies is going to play out. I need say no more than Tesla going from $25 to $1,000 in 2.5 years. It was a major surprise to some people. And it was because they didn't understand the story.
You know, I think this is a fair thing to say. 100% of the investors who've owned or considered owning Tesla stock, who either didn't or sold too early or panicked, sold for a loss, etc. Those folks who look back with regret and wish they bought more or bought at all or didn't sell, etc. 100% of these investors didn't understand the story. They didn't actually understand what Tesla was, where Tesla was going. Maybe there's exceptions to the rule, struggling to think of any at this point in time. And I think the same thing applies to people who along the way have been locking in some of their profits. I can't count the number of people who've commented on YouTube videos over the past 2.5 years, give or take. Tesla's gone up 20% since you posted this, man. You should sell, lock in your profits. Bro, Tesla's doubled, man. On and on and on and on. $35 a share to 50, 100, 200, 300, 400, 800, 900, 1200, and back to where we are today. I personally believe that the people who've sold, except in case of emergency, locked into profits, etc., also had no idea what they were doing and didn't actually understand the story. I think in 2031 and 2041 and 2051, people who locked in some profits without needing to, without an emergency on Tesla stock, are probably going to look back with some regret. Why didn't they just hold it?
We feel that is a theme that's going to play out again and again and again in our portfolios.
With innovation comes volatility. So can you address that?
The first thing I want to say is volatility is not always a bad word.
Unless it's the most common trait exhibited by your girlfriend, in which case you definitely need to get a refund, buddy.
In fact, in a bull market, volatility is your friend. Certainly that was the case for us in 2020. The reason it has become a bad word is since the tech and telecom bust, we have seen every bear market accompanied by an increase in volatility as measured by the CBOE's VIX. And yet, because so many people in the business joined after the tech and telecom bubble, they do not remember that we have seen volatility move up in up markets for extended periods of time. And I think we will go back there again. I think 2020 was a glimpse at that. And we use the volatility to our advantage. We know that disruptive innovation is controversial, and with controversy can come volatility. We believe that our research points us in the right direction. And so if a stock is down 10 or 20% in the short term because of some earnings result where a company decided to invest more to innovate and was punished, we will be buying trading a stock like that. So we use the volatility to our advantage. And very often you will see that trading around volatility adds significant alpha. In 2018, when the market was down, our trading around Tesla alone, now granted it was one of the more volatile ones, our trading around the volatility of Tesla alone added, I believe, 175 basis points to performance in a down year. That had nothing to do with how Tesla did. That was simply our trading.
In short, volatility is your friend. Let me know in the comments below. How do you guys and girls handle volatility in your own investing? If you own one stock or a few stocks and they get absolutely destroyed, how does this make you feel? Do you feel down? You get excited because you know you can buy at an even greater discount. You're expecting an even higher return. Get down in the dumps. Oh no, my stock's down even though I haven't sold, but I feel sad because it's red. Be honest. Cathie Wood also made a great point that she's now expecting significantly higher returns over her 5-year investment horizon. And as I showed you guys and girls, I'm expecting the same now with Tesla stock. Even in my bear case, I'm now expecting over 12x in the next 10 years. And of course, if you'd like access to all of my Tesla price targets, the bear case, the base case, and the bull case, sign up to Patreon with the card in the corner or the link in the pinned comment. At this point in time, I think even ARK Invest and Cathie Wood are underestimating Tesla stock. Bit of food for thought. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment theme merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.